Hi everyone, it's Friday, Friday, February 8th. It's Alissa, Coram, and Ed Carson with a look at the stock market today. I'm a month off here, but on today's show, we're going to be talking about the IBD 50 Innovator ETF, growth stocks outperforming today. Also taking a look at restaurant brands setting up ahead of its earnings report, and taking a look at the trade desk trade after its breakout a couple days ago. But first, let's take a look at the major indexes. The NASDAQ closing well off of its lows, almost about flat for the day. The S&P 500 down about 0.1%, and the S&P 500 down 0.1%, and the Dow down about 0.5%. But for the week, we pretty much erased the losses. Yeah, I mean, we've been saying this is actually very positive action overall. When you think about it, we basically had the indexes come up to the 200-day line, hit resistance, but then, you know, we really aren't falling that much. And to have that action going, you know, the NASDAQ, and sound like, okay, it's a little bit of a pullback, but it doesn't look, you know, outrageous. It doesn't look like a lot of damage to the indexes, and growth stocks are doing relatively well. So, you know, this is fine. We've had a big run. The NASDAQ actually rose again for the week, so I think that might be 7 straight weeks for the NASDAQ, and you know, we're coming up on that 200-day, coming up on the December 3rd peak. Right. So as far as investors and how they should be looking at the market and approaching their portfolios and their exposure heading into next week, where we could have some potential catalysts, what are your thoughts on that? Well, first, in general, just when you have a pullback, you should be thinking, well, you know, just be more careful and just realize that the leading stocks may come back too. If the market pulls back, top stocks probably will too. So you just be more careful on that. But you know, we've got the China trade talks are starting up again next week, and it was China trade concerns that pulled the market back, and growth concerns. So that would be an issue. If we have positive word out of that, that would be great. And there's also government funding expires once again on February 15th. Now, the market went right through the shutdown, so that may not affect it. Still, that's got to be an impact. You know, that's something to be out there as well. Well, growth stocks outperformed today with the IBD 50 ETF FFTY gaining some 1.3%. So this goes to show you that growth stocks in favor right now. Yeah, I mean, that was really nice. Even when the market was near its session lows, the 50, you know, which is tied to the IBD 50, was moving positive, and it was just really nice. Yeah, growth stocks, there were some growth stocks breaking out mostly on earnings, but you know, there were other stocks that they were just acting well. Yeah. And, you know, it's always nice to see that. You know, so. Exactly. Extending gains after breakouts, or, you know, nearing profit zones, some stocks as well. That recapturing buy zones. Yeah. There's some nice action out there today. Yeah, there is a lot of nice action. And we want to take a look at restaurant brands setting up ahead of its quarterly report next week, forming a handle after a gap out on a pre-announcement of its results. Yeah, they had some same-store sales numbers out, so they were pretty strong. Obviously, the market liked it, and you can see how that stock surged in late January on that news. You know, then it's been consolidating basically last couple of weeks, forming a handle, but it's acting nicely. You know, a lot of restaurant stocks have been acting well. You know, Domino's is in a buy zone, leaderboard stock, Starbucks hit a new high today. So it's in a good group right now. Right. So when you're looking at stocks that are setting up before their earnings reports, I mean, if you look at the past several weeks, we saw a lot of names gapping up out of bases after their earnings. So as far as handling this, the recommendation wouldn't necessarily be buy heading into earnings, because it's very risky. Yeah. But if a stock does happen to gap up on their results, where would you go from there? Well, the idea is that you buy it, you know, close to the opening price. You know, that's because that can be very bullish, even though it's scary. I mean, you know, to see a stock up 15, 20%, it's just way out there, but that can really show strength. I mean, it can be very volatile, but that would be where you would set a buy point if it went way above. Now, this is not
this particular stock, but any stock like that, because we had stocks like Columbia Sportswear, you know, and Ubiquity doing that earlier today, you know, just breaking way out beyond the buy zone from a traditional point.
Exactly, and as Chris and I and Justin and I discussed earlier this week, looking at those intraday charts can also be helpful, but I think as you mentioned, buying as close to the open can be good if you're really wanting to get in and see some momentum, because a lot of these names came off of their intraday high, closed maybe in the middle or the bottom of their intraday range. So, you know, if you're waiting to buy at the top of the intraday range, you know, that might not be very good action that you see that at least that day. Yeah,
and you probably want to wait a few minutes at least for sure. But but you know, that is definitely a buyable strategy.
That it is. And speaking of buys, checking in on Trade Desk, which recently broke out of a double bottom base with a 149.10 buy point. Now, with the volatility that we saw this week, it did pull back a little bit, but answering one of our viewer questions here about Trade Desk, walk us through what we should be looking at here, because it did pull back some, but it hasn't triggered a sell signal.
No, it hasn't triggered a sell signal. I mean, obviously, you know, the stock broke out in nice volume, so it was a positive action. But guess what? You know, 2 days later, the market started pulling back, and you know, this is just a sign. Yeah, well, yes, growth stocks have overall outperformed. You know, they generally came back down some, so it came back down. You know, and that happens a fair amount actually. You know, a lot of breakouts. Maybe a third to a half of all breakouts come back to the buy point.
So you have to be prepared for that.
Have to be prepared. Now, it did sort of bounce off of its 21-day line, which is positive. That's sort of an area off, and you know, thinking, but still below the buy point. It's still valid. You know, this is just something to be covered. This is why you want to buy as close as possible to the buy point, so you don't get caught. So you don't be like find yourself down 6, 7, 8%. When you know the stock is acting normally.
Exactly, and that's why we have that 5% chase zone. You don't want to be buying extended stocks, so there is that 5% wiggle room, but as close to the buy point as possible is very ideal there. Now, could we see a handle for him here? Maybe, you know, someone watching this doesn't have a position in Trade Desk. Would we want to see a handle here maybe for another entry? I
mean, that certainly could happen. I mean, it's like it's been a few days. That can be an alternative entry. You know, if that seems to be a more valid resistance point, you know, coming forward. But, you know, just in general, you know, just that, you know, we see these patterns all the time. I mean, that's what comes on. I mean, it's like, I mean, I was watching the Super Bowl and everybody was praising Tony Romo after the Super Bowl because, wow, look at he knows what plays are coming up. Well,
predicting what's happening.
Yeah, it's like, look, the Patriots ran the same play 3 times. I mean, the fact is that's what happens with the stock market. I mean, it's the same patterns time after time. Now, it doesn't mean everything ever works. It doesn't mean you get a completion every time. But, you know, you see a couple with handle. Yes, we know why do we look for these patterns? Why do we look for this action? Because this is what the market does. These are successful patterns. These are successful action going forward.
Even with our recent focus on these gap ups, there's a reason why we're looking at these, and it's giving you an edge when you're investing instead of, you know, looking at a super broad universe of stocks. Checking the fundamentals and checking the chart can really help you get that edge.
Absolutely.
All right, everyone. Thank you so much for tuning in today. We really appreciate it. And make sure you head to investors.com for all the latest stock news and analysis. And check out the IBD Weekly out on newsstands this week. You had a hand in this week's feature story.
Yeah, it's about the stock market outlook. I mean, you know, the interesting thing with it, despite all the noise of politics, you know, in Washington, you know, the market really did benefit from tax cuts and deregulation. But going forward, you know, it is interesting. There's a lot of agenda. The Democratic candidates are calling for reversing the Trump tax cuts and imposing a lot of big tax hikes on top of that. And so it's going to be interesting to see, you know, political risk could be the big risk for the stock market as we near the 2020 election, especially as Trump re-election, you know, prospects seem relatively dim. You know, like we're shifting the window of where policy is going to be. It may be a big shift.
All right. Well, it sounds like some very interesting insights that you'll definitely want to check out and be aware of. So make sure you check that out on newsstands and at investors.com. Thanks for joining us. You can check out all of our content also on social media, from Facebook to Instagram to YouTube and Twitter. So if this is your first time watching us, make sure you are following and subscribing for all the latest. Have a great weekend, and Ed and I will see you right back here Monday.